Welcome back to my channel. I'm your host Miss KK, and this is your weekly show that talks about all things money. On the show we get to dissect topics related to personal, family and business finances, and my hope is that by the time we get to the end of the series you'll be better equipped to deal with your finances. Thank you very much for passing by. If you're new here, welcome and consider subscribing. And thanks to the 120 of you guys that have subscribed to my channel. This is our second week and I'm very excited for your support. Please continue sharing the videos with your friends and family. Our hope is that by the time we get to the end of this series, we are all better equipped to make sound financial decisions. Today, I have an exciting topic, and that's how to navigate your finances amidst the impact of COVID-19. Yes, COVID-19 is around for some time now. We've been here around nearly a year and a half now. Okay, a little bit just below a year and a half now since the first lockdown occurred in many countries, and there's no doubt that we're still gonna be in this impact for some time, and the recovery for many economies is going to take some time, so we really need to get comfortable with the new normal, especially the impact of COVID-19 on our finances. Okay, so what are some of the positive impact that has come out of COVID-19 and how can you capitalize on those? We are also going to be touching on the negative consequences of COVID-19 and how to adjust your finances to make sure that you are at least staying afloat with your money. Number one, the first thing that came out positively for a lot of countries is repo rate cuts. So for a lot of us that don't know what repo rates are, so that is normally the interest rate that is used by the Reserve Bank in any particular country or a central bank in any particular country to try and regulate the flow of money in the economy and to try and help the economy. So if the central bank sees that there's too much money in the economy and the economy is extremely growing fast than what it can accommodate, normally in instances like that, the central bank is likely to increase the repo rate, and the repo rate is that rate that the central bank charges the commercial bank. If the repo rate increases, that means your prime lending rate, which is the rate that your commercial bank, the likes of FNB, Nedbank Namibia, your Bank Windhoek, that rate that they lend to us, which is now your prime lending rate, is likely to increase. So contrast that when the economy is doing extremely poor and everyone is struggling, businesses are shutting down, consumers are struggling to stretch their last dollar. In that instance, the central bank is likely to intervene to try and cut the repo rate, and consequently, central bank regulates the commercial bank and asks the commercial bank to also lower the interest rate. So ultimately, what happens is there's more borrowing power and the consumer. There's more money in the consumer's pocket, and customers can borrow at a reasonably affordable rate, and businesses can also afford to expand, take out new finances to carry out those expansion plans in order to try and help the economy recover. So basically, those are the two central bank role in a nutshell. Obviously, the central banks are there to do a whole bunch of things, but that's what I want to contextualize in this discussion today. So when COVID came around, a lot of countries did cut their repo rate, meaning that for a lot of us that had debt, our debt has become slightly cheaper. For me personally, I have a home loan and my home loan actually decreased, and that meant I have a little bit of money left in my pocket for me to actually spend. So that's one good thing that has come out of COVID-19. So then actually now, if you want to borrow anything from the banks, it's actually the best time to borrow because the interest rates are that low. But you need to borrow in context of your facts and circumstances. Do consider the uncertainty is a little bit higher in terms of job security at the moment, not as it was not at this stage as it was last year, but for a lot of people you can't really afford to take on that much loan if your job security is not that if your job security is at risk. I wouldn't advise that, but generally if there was ever a time to start to borrow money, now would have been the best time to borrow money because you are borrowing it at a lower interest rate. Okay. The other good thing that has come out of COVID-19 is obviously now the work from home arrangement for a lot of people, especially those that work in corporate and those that don't work in jobs that require practical on the job, practical site-based. Those people were able to work from home, so that meant those people have a few cost adjustments, such as they don't have petrol in their budgets anymore. Some of the insurance have also come out to lower people's premium if you don't drive X number of mileage, which means your insurance costs would have also gone down. I don't know if it's applicable to all the countries, but at least I've seen it happening in South Africa. And also that means you also don't have lunch at work. You can afford to just cook at home and eat whatever is in your fridge. So those are some of the positive things that have come out of COVID-19. The other thing that has come out of COVID-19, especially the first 6 months of the lockdown, there was a lot of payment holidays and payment moratorium that were granted to consumers by banks. What that meant is that the bank was going to suspend, depends on what the arrangement was, but most of the banks suspended the interest and capital from, they suspended the capital payment. That means consumers were given an option not to pay for a particular period of time. Some of the banks have also suspended interest accruing or capitalizing on that loan. So if you are sitting in a situation your bank was suspending the interest accrual and giving you a payment holiday for an X number of period of time, and you were really unable to make that would have been something positive. But obviously those rental concession were short term in nature. They weren't really extended over a 6 months period. The longest I've seen is 6 months. So that was also something to try and help consumer sort of shield themselves over the impact of COVID-19. So obviously if you had a payment holiday, that meant you were able to stretch your dollar, and hopefully you were able to save something extra for those 3 months so that you can use it when your dry spell comes. Not necessarily that you're going to have a dry spell, but that was the aim of that incentive. Okay, so those are some of the positive financial impact that came out of Corona. Then you have your negative impact, that sort of, which is what I wanted us to speak about, but not necessarily to hammer the negative impact of COVID-19, but rather how to make adjustments around your life to make sure that should you find yourself in the situation again, you are sort of prepared to do it. Most people got salary cut, which meant that they moved from having 100% salary to an 80% salary. Obviously, if your income is cut by 80%, it doesn't necessarily mean that your expenses are going to be cut by 80%. So people all of a sudden found that they were unable to fulfill their commitment, especially those that goes off debit orders that can't really be cancelled immediately, and also just paying some of their necessities such as rental payments, etc. So for those people, it was really hard. But what I've seen some people doing is doing a drastic lifestyle adjustment. Listen, you can't afford to have a 40% salary cut and live life the way you were doing, unless, of course, you were already saving at least 40% of your salary. If you weren't saving 40% of your salary and at any given point in time your income was equaling your expenses, what that meant is that you needed to adjust your salary so that you can cut out, not your salary, you needed to adjust your expenses so that you can cut out at least 80% of your expenses. The first starting point to normally do is, if you have an expensive car that you can afford to sell and trade in or sell so that you can cut off some of the expenses, you could have done that and downgraded to a cheaper car. I know it's a very difficult decision to make, but if it comes down to that, that could be a possibility. Other things is, if you are renting a bachelor flat by yourself, you could consider renting a place where you are sharing a room with someone, or you can consider renting backyard flats, etc. Those ones are normally cheaper than your normal standard rentals. And also a lot of people with their salary cut, some people also lost their job completely, meaning their emergency savings was supposed to start kicking in. For a lot of people, they didn't have emergency savings, and that's where really emergency savings are meant to cover us for times like this. So this is a wake-up call for a lot of us to start considering emergency savings. Yes, the standard rule is normally you must have enough money to last you 3 months if you were to lose your job, because back then it was considered relatively a good length period for you to get a new job. But we do know in Corona time, it's probably gonna take you a lot longer to get a new job, because no companies are recruiting, businesses are shutting down, and this starting up a new business is not always viable with certain industry at this point in time. And certain people have specialized skills. Let's say you worked as a pilot for Air Namibia, and Air Namibia all of a sudden shut down. You don't have any other alternative to become a pilot in Namibia, because that was the only airline, except now the newly established West Air, obviously, and I don't know how many pilots West Air is able to absorb. So if you were in a situation where your skills is very specialized, you might find yourself in a situation where 3 months is all of a sudden not enough. So when looking at this emergency saving context, you need to look at what industry that you work in, what experience you have, and what other job can you do outside of your industry, and then that's what you should use to judge how much your emergency savings should be. And lastly, what I want to obviously edge out a lot is, because a lot of people lost their jobs, a lot of people lost their income and that meant for us that weren't affected, we needed to increase more of our giving jar. So in your budget, you should always leave a provision to give, either to charity or to family members that are struggling, or to friend, or even to church. So that means a lot of us actually needed to expand our giving jar to accommodate more people, because we obviously have friends that have lost their jobs, we have families that don't have work anymore, and they will rely on us, and we generally need to extend more help, is because a lot of people need our help more. So basically, those are some of the negative things that really came out of Corona, but most of them served as wake-up calls to allow us to become better should something similar happen. So my message today from this discussion is, go back, look at the negative and the positive of impact of the negative and the positive impact of Corona. Looking at the positive impact of Corona, what can you capitalize on? Obviously, things like if you have a home loan, a car loan, your interest rate would have lowered down. That meant you all of a sudden have an increased disposable income. If you didn't have a salary cut, can you maybe afford to pay extra on your loan so that you can finish your loan early? Can you maybe afford to add on to your loan if you maybe want to upgrade your house, because that meant you are taking out a new loan at a cheaper interest rate? And can you maybe start, a business with a loan, because the loan is probably going to be cheaper, considering the fact that the risk of your business succeeding is probably a lot higher than starting a business when the economy was booming. And if you find yourself on the negative end of the spectrum, you need to look at, are you working towards rebuilding your emergency savings? Do you actually know what emergency savings are and what should be in your emergency saving? Have you received the salary cut, and have you made any lifestyle adjustment? If not, can you consider making some of the lifestyle adjustment? And lastly, if you are not affected, are you giving enough to people that are affected? Yes, it doesn't have to be church. Yes, it doesn't have to be family, but just extending that kindness would make the world a better place to live. That's all I had for today. Thank you very much. And again, if you haven't subscribed, please consider clicking that subscription button. And if you're already a subscriber, thank you so much to the 120 of you guys. I'm so excited. And as always, stay safe and sanitize.